Mohammed Shiri in DBBL in Bangladesh is going to do fantastic stuff in Bangladesh. It will become a global model. The number of people like this you find across markets is very few. If I were to take a bet, I would bet within 3-5 years time they will work in telcos. The reason is it will be difficult for this to be continued in the bank. He can only evangelize so much. At some point in time, all this effort that he is putting in the bank is going to result in a small portfolio in the overall bank. The bulk of the portfolios don't come from wealthy customers who are borrowing a lot, who are saving a lot. So the effort being disproportionate to return is going to be a challenge for the bank to continue. So the ambitions of the people, their abilities, the changes in technology will force them to look for alternatives that can deliver a better design to scale. So I think it's a question of when. So I'm saying all these things just so we can look back in hindsight 5 years later and look forward to being again finding out where we are. Same way I look forward to seeing which of the models that have solved the inclusion problem, so that we don't confuse it with the mobile banking or already included people doing in banking, which I think is a bank prerogative. I think it's a bank's business, and I think they'll do well. So having said this, I think I am kind of done with the first slide if I can figure out how to operate it. This is basically to acknowledge that the inclusion problem that we are discussing in Bangladesh is no different, if anything, perhaps it might numerically be much smaller than the inclusion problem in India. And we have been struggling with this there. And a lot of what we discussed required a new design. So when we discuss new design, I just want to take a parallel from other industries so that we can see that it's not such a radical question. So if you look at Shinkansen in Japan, that's a bullet train. Of course now it's no longer innovation because around the world there are many trains that run like that. But originally when they conceived it, at that point in time, the impetus came from, they had cities which are getting overpopulated. So they said, how do we get people to live in outside cities? Because otherwise Telco in radio area is 30 million population. So it's bigger than the kind of towns that we live in. Right? So the answer to the question was, if people could stay further away but could commute efficiently to come to work, then you may not need to get everybody to the city and that infrastructure will not start breaking down. That was the original problem. To solve that problem, they said the commute time can only be cut down if the train can run fast enough. So if a 300 km journey between Tokyo and Kyoto can get done in 2 hours time, then really you don't need to worry about everybody needing to come to Tokyo. So to solve that problem, the trains have to run at greater than 300 km speed. So, a great engineering nation that it is, it went inside the problem and said it's logically impossible because, the friction on the tracks, with the train is just not going to allow the train to run faster than that. So they said now if what we want to solve is the train must run faster than 300, what do we have to do? Right? Which is a bit like the Apple thinking. And then they came back and discovered that we need to reduce the friction level, which means some kind of regulation will need to be applied. The magnetic regulation was therefore invented. It took some time to go and construct it, but first there was a design that this is the problem that we want to solve, which led to the eventual solution, and that becomes a normal practice. So the same way for inclusion problem, if we say we need a design for scale of delivery of financial services to a very large population, that makes it at a minimum break even. And that makes it possible in a short time frame. It's not that we're going to send the rest of our children's lifestyle to try and get inclusion. If we had to do meaningfully, let's take India's case, if 1 billion people have to get access in a 5-year time frame, what kind of scale we have to open accounts for? Who can do that in a cost-economic way? How do we provide the right incentive so that that gets actually cost? So needing to fix the frame or design will drive a consensus between various parties. It will be very easy to say, if you go and do this, how do we ensure you don't get into banking space? If you cannot keep the money anyway, you're not in the banking space. If you cannot manufacture products, which is very licensed business, I cannot give loans if I don't have adequate capital. I cannot take deposits if I don't have reserves. It is not possible to do banking services as telco. There it requires expertise to manage risk, it requires expertise to manage liquidity. These are not skill sets that telcos are keen on. There is not a telco that I've met who's designing this. But telcos desire payments. Payments is not banking. Payments has never been banking. For insurance was part of banking at one point in time, it is not banking. Capital markets is part of banking at one point in time, it is not banking. We've got different regulators now in most markets. Payment systems regulators, Sri Lanka got a payment system regulated in 2005. India got a payment system regulated in 2007. Within an overall NATO banking institution had a regulator, these have become specialized areas. Payment systems is a specialized area. Let's take credit cards, which banking considers to be core product. 1950s and 60s, first credit card got created. Always created by a bank because it wanted to provide a service to the customer. Within a short period of time, they said, look, it doesn't matter, we can, any bank can go back and issue it. Now, non-banks can issue credit cards. The plastic is not made by the bank. The network is not managed by the bank. No part of this external ecosystem is managed by the bank. But the credit function belongs to the bank. The loyalty points are given by the bank. Manufacture is banking business. Payment systems are not banking business. Payment systems are a cost to banks. Having spent 22 years in a bank, the reason why he is evangelizing, not charging for payments is because he wants the banks to understand that the main business is going on is getting deposits. Am I making sense? So you can take ATMs. The first ATMs are invented by banks. ATMs are no longer owned by banks. They don't have to be controlled by banks. Shared ATM networks are run by other people. The people who run them need to continually evolve technology, run security, interconnect with banks, ensure cash stocking levels, ensure physical security. There is a range of specialization that requires the channel to be managed, which is not core banking expertise. It's not that a bank can't do it. It's not going to be economically viable if you want to scale it or explode it. Can we run, can any bank run 100 ATMs, 1000 ATMs? Yes. Can they make that model run for 1 million ATMs? I don't think so. Right? Unless you really have so much money that you want to put on the table, and even then you should introspect on whether that is the line of business that you want to be in. Mobile technologies are changing very rapidly. People in the mobile industry find it a challenge to keep pace with that. Handsets change, the network speeds change, the applications change, the security levels change, user experience changes. The digital fingerprint that you can capture about a person is far more extensive now than a human fingerprint. That kind of technology requires different kind of security people. It requires different kind of usability experts. It requires different kind of applications to get created. Is that expertise that the banking system is going to sustain? How many shites will they invent or create or nurture? And how many of them will continue in the banking sector? So we've got to examine what should be banking and keep it there, and anything which is not, we must invite partnership. So I think from that perspective, the Google example is another example, but it's an example of design for a commercial model purpose. Normal commercial model says, if you provide something to a customer, you must charge a price. If it costs me $10 to make something, I must charge you $11. Google started in 98, pre-98, the company didn't exist. Today it's a $200 billion plus valuation company. From the beginning, Google said, I'm not going to charge. They put a search box and said it's free for you to search. Whatever money they managed to keep raising from VCs, they kept putting back into boxes. Everybody knows the story. But think of a commercial model, born less than 12 years back, which has created a $200 billion institution. And this really, causes me heartburns to say, because I joined Citi around 89, and we were at $260 billion company. Right? And the Citi history. As a financial institution, we invested significantly in technology, but we backed models that allow at least to recover back the customer price. Right? We didn't develop a second line of business where we said, look, customer can do this. I think banks have a restricted business. I don't think that banks can do these kind of things. But in the Google example, by having millions and billions of people coming to their website and using technology to give them alternatives, so the revenue comes from people who want to do business with these customers, and therefore it's a very profitable business. Right? Google definitely makes money. So there is an invention in the business model required if you are going into an area where directly the consumer is not going to be able to pay. So if I'm going to take a $1 deposit and I'm going to charge the customer a lot of money, it's unlikely that I will get enough customers and address that design scale. So this is the second piece of the problem. So financial inclusion, I think developing a framework for e-money, mobile-based payment systems, developing a payment systems network, expertise in the regulator which is standalone, ensuring that it marries well with the banking industry will solve that problem. Whichever market, whichever regulator, whichever bank telco partnerships, do this faster. I think there is an example for the world. This is my belief. I'm happy to be challenged for it. Time will figure what really works well. It's a very evolving world. We have two deployments in India. One, we have our own wallet. and the other we've got a partnership with State Bank. State Bank is the largest bank in India. They've got say 16,000-17,000 branches. We have 200 million customers. We have about as many accounts. So from a size sense, they're a very large international bank. Their ambition is to be a bank with every Indian. So that's one side where if State Bank has an appetite to provide these guys accounts, as a telco, we're very happy for it. So long as they get width, any bank that can give me width in their customer base, fulfills the design requirement. Equally, we have a license. We've just started. We deployed in 2 cities last month as a pilot. We are opening about 1,000 accounts a day now. It's 30 days, but again, all the accounts that I'm opening, the money that sits in these accounts is actually sitting with the bank. It's the individual accounts that I manage, and it's cost effective to do so because I'm already, as a telco, when we open an account, the application form, the KYC document is identical to what you require for what India calls as a no-frills account. So India has created a regulation called no-frills account, which is a very light account. They say you have lesser KYCs. If the customer starts keeping larger balances or doing more transactions, then you ask for additional guarantor, additional kind of checks. So that becomes a full-scale account. Then you get a checkbook, you get an ATM card, and that kind of thing. So in terms of to capture it in simple terms, what would be the difference in thinking? Because all this is nice to say, but if it doesn't make us reflect on some areas to be done differently, then it will just be a philosophy discussion between telco versus bank. I don't think these are two different sides. There's actually a combination of skills of both which will be needed for inclusion. Definitely to solve inclusion, we need technology-centric processes. Anything that requires touch, if we say let's meet the customer face to face, let's verify the documents, the more cost they are, somebody needs to bear them. I don't think the customer can bear them. I don't think the government should bear them. I don't think the bank can afford it unless it has a 10-year appetite. If it is incremental, if I'm already capturing it and I add a tick box, you might be able to improve a little bit of this cost. So that's one area. So these are just frameworks, and it depends on the different markets and what they can apply. Same way, for example, need for banking. So if you go to bulk of rural India, at least, and I do not know the difference in these markets, but what people ask for at the time is not saving money. They're not yet at saving money. What they're looking for is the ability to send and receive money. Let's say I make, in Indian terms, let's say I make 1,000 rupees a month. So that's my income. My expenditure is likely also 1,000 rupees a month. In many cases, I'm actually borrowing money from money lender to keep my monthly expenses going. So from a banking perspective, I don't look like a viable customer because I really don't have money to save. But from a payment systems perspective, 1,000 rupees a month plus 12,000 rupees are transferred back and forth. I transfer to the year, and if expense also can be virtualized, since I can make payments through mobile phone, I have access to 24,000 rupee pool. If you charge 1% of that, that's 240 rupees that can pay for a payment system. So we need to examine an alternative model if we have to include these people. And sending and receiving money is an initial step. That's how M-Pesa started. But now M-Casho is what is booking business. All the people who are doing M-Pesa are opening accounts at banks or taking loans from banks, which is called M-Casho there. And that's a very big business. And if you go